Okay, we're having the mobile advertising panel. I just want to introduce each guest, and we'll just give a general overview, or you guys can give a general overview where you fit in the ecosystem. So I'll just give just a basic summary of what you do, where you fit in the market, and some of the challenges, and where you guys are headed. So I'll turn it over to Alejandro at Eagle Ninja.
Thank you, Paul, and very pleased to be with this distinguished panel and all of you. Eagle Ninja is about mobile quest marketing. We're all about making consumers have an experience rather than receive a one-way advertisement. So we bring people into a point of sale in a category of interest, and we ask them to engage in a series of activities to kind of draw them in to interact with the brand or product. If you think about how a good salesperson interacts with you, where they start asking questions of you and then gradually reel you in, that's what our mobile app does for targeted prospects using location-based services. And the way we do that is we invite you when you're nearby a point of sale. Like, for example, you're in the market for buying a car, you're nearby a car dealership. Hey, would you like to come in here, test drive a car, do a few other activities, and I'll ask some questions, and I'll pay you $10 or $25 for your opinion. So you see this as a gamified survey or gamified mystery shopping experience. But what we've really done is we've brought you in to a place where you're at the point of sale. It's easy for you to do because you're nearby. It's a category you're interested in. We engage you with a series of games. Maybe we ask you to take a selfie of you while you're wearing some clothes, or engage in some kind of digital game purpose-built for that particular brand, and that leads to conversion. And that's what we do.
Great. Hello, I'm Evan Schwartz. I'm the CEO and co-founder of ActionX. At ActionX, we do mobile app and cross-screen retargeting. So we actually started the business 3 years ago to focus on customer acquisition, mostly driving app downloads, and we quickly heard from most of our clients who are in the retail and travel and subscription categories, basically, thanks for the downloads, but we need revenue. So there's this huge issue that's happening now that people were so focused on just driving downloads, they had no plan post-download to get people to engage with their apps. So we saw that problem and decided to solve that from the media and advertising side of things. So we work with mostly transactional brands to take their first-party data that's typically just trapped in their apps that they don't use. We take that data, we segment users based on the behavior inside of the apps and also across mobile web and desktop web, and then retarget them with relevant and personalized ads to get them back into the app to make a purchase.
My name is Adam Landis. I'm with LifeStreet Media. LifeStreet's been around for about 8 years. Solely in the application space. We started out on Facebook, and as Zynga and all of the other big players in Facebook started to have a lot of revenue and dollars flow through the app space, we gained some traction there, and as the Facebook applications have started to slow down, we made the transition to mobile, so we are mobile and social applications. And we focus on monetization for publishers and distribution for the app providers. We've paid out about almost $200 million in revenues to our publishers, and I think we're up to 300 million installs over our lifespan.
Michael Seidler, I'm the founder and CEO of Madison Alley Global Ventures. We're a strategic corporate development, M&A, and capital advisory group. We focus specifically on digital marketing, media, and ad technology, and within there, the subsegments of mobile, video-rich media, advertising technology, programmatic platforms, data and analytics, social media, and digital marketing and media services.
Excellent. So I think a topic it should be interesting more on the market side, and you guys could kind of tie in how your company fits with what's been going on in the public and private markets. I would say there's been some IPOs. Haven't been very successful, but on the M&A front, these multiples have been pretty crazy. So I wanted to get an idea what you guys see in the marketplace as far as the different types of technologies, business models, in addition to, as a private company, is it better to go public, or is it better to partner with a large acquirer with a high cash balance? So just thinking about those thoughts into your company strategy. Why don't you start with Alejandro?
Sure. Well, as you all know, the mobile ad tech space has been somewhat out of favor within the VC world recently, but I think that's changing and now it's coming back. And I think particularly mobile represents fantastic opportunities because there's a problem that has not yet been solved. And so I think the investor ecosystem knows this, knows the opportunity is huge, and so I think there'll be a lot of opportunities. Speaking to your question about public versus private, there have been some recent acquisitions in companies that do things similar to what we do, like Shopkick was acquired for $200 million by a Korean company about a month ago. The question of whether it's better to do a private partnership versus public, my own personal opinion is that, and I was involved in one of my previous startups with almost going public. Going public is a very expensive proposition. I think if you've got the right partner, strategic partner who can bring you not just money, but customers and channels and other things, that can definitely be an interesting proposition, at least for a company at our stage of the cycle.
Yeah, I think I have similar thoughts on that. I think mobile ad tech has been a bit out of favor. It is coming back, but I'd also say that if you're just a mobile-focused advertising company, then you probably have a problem. You have to think about the full customer journey. You have to think about how to tie together different platforms and different screens. And being mobile only gets you so far because there's the bigger budgets are still not on the mobile side. And a lot of the consumer activity is not happening on the mobile side of things. And that's one of the reasons that we focus on bringing together the desktop data, mobile web data, and app data, because especially for e-commerce, while mobile commerce is exciting and it's growing quickly, it's still a very small part of what's happening. And then if you think about what's happening outside of e-commerce and mobile commerce, 90% of commerce still happens offline. So you need to pull that all together so that you can track the customer across the entire journey and also manage attribution across that journey. In terms of staying private or selling or going public, I've been a part of a public company. It's not that fun. I think being private, if you can do it, is fantastic. And if you can find a partner to help accelerate the growth of your business, that's great as well. So I think being public is expensive, and it becomes difficult to manage the business the way you want to.
The theme here so far is out of favor in terms of advertising and mobile. We're in the display space. So speaking of out of favor, it's not kindly looked on by the analysts, even though it's making $40 billion a year and growing at 50% in terms of mobile advertising. We've been in the display space, and I think the key to being successful is sustainability and being able to maintain whatever growth tract you are on. I don't know if any of you know, speaking of IPOs, the Velti acquisition. As part of the Velti IPO, MobClick's acquisition. Talk about some hair on that deal. The challenge was there wasn't any sustainability. There's a lot of other challenges for another day, but when it comes down to it, LiveStreet is a profitable company. It's making money, generating margin. When we are going out to investors, we closed a $66 million round of funding for our A series right after 3 or 4 years after our angel. It's the goal of the company, and this is going to be a topic as we talk about advertising for me, is sustainability, being able to go along the path. Whether you're the advertiser and looking for distribution, the advertiser brand looking for brand recognition, it's being able to tie back metrics and become profitable and look at ROI, which is what the winners in the space are doing right now. So yes, there's some hair on this space in terms of the scrutiny from the analysts, but everyone knows it's growing, which is why we have a panel of us up here talking to you guys. There's a lot of money in the space. It's about being a sustainable company that has a plan to profitability, bringing value to advertisers and publishers.
Yeah, so if you look at the public markets, and in the last 12, 18 months or so, there have been about 9 or 10 ad tech companies that have gone public. And if you look at the past 12 months or so, I would say about 8 out of the 9 or 9 out of 10 have traded substantially below their IPO price. The distinction being like a TubeMogul, for example, which is programmatic video advertising. But if you look at most of the others, if you look at like Tremor, Yumi, Criteo, and kind of the list, most of them haven't done well. And the distinction tends to be that those that have really deep, robust proprietary technology versus kind of media or ad inventory, and also the video and rich media or like kind of premium advertising where the margins are higher, to some extent the data analytics where it's really deep insights where the margins again tend to be a bit higher, those seem to be much more sustainable. What's happened is if you look at like Tremor or Yumi as perfect examples on the video side, just hasn't really proven to have enough sustainable technology to drive the margins high enough and to build sustainable models. So looking back at the kind of private or public question, some of these companies really just weren't large enough perhaps should have gone public in the first place. But the other sense is just that everyone knows the public markets has the pressure of the quarter-to-quarter meeting numbers, and so some of these companies just literally weren't ready yet or built yet to be sustainable in the public markets under that type of pressure.
If I could jump in there, I couldn't agree more with that. The advertising market on mobile, everyone says it's young, everyone says it's brand new, but if you think about it, even though it's 40 billion, it still represents 10%, 11% of digital spend right now. 11%, and now we're spending more time on our mobile devices than we are PCs. And if you look quarter over quarter, last year we were sitting down, it'd be a completely different group of people that were the top spenders. So in a market where the top spenders are changing quarter over quarter, now it's Supercell and King being the biggest spenders for mobile advertising, how can you make a sustainable business if the spenders aren't even the same, unless you're changing your core business every quarter, and that doesn't bode well if you're a public company.
Yeah, exactly.
So I guess the other area that's been big lately is within mobile advertising. Part of it is programmatic and mobile RTB, and so I'm just trying to get an idea what is the quality of the ads and the whole fraud implications in the space, and what does the market and the various companies think about it, and how does it pertain to your company?
Well, there's fascinating disruption going on within the industry right now because of programmatic. It's really changing the relative power of media agencies versus creative agencies, and it's actually disintermediating a host of players within the ecosystem. At the end of the day, programmatic is a means of delivery, and all of those other things that go around with it, it's all about delivery. In our particular case, we're kind of agnostic because what we're focusing is on what is delivered versus how it's delivered. So I won't really, perhaps my colleagues have some more to say about programmatic, but that's my 2 cents.
Yeah, so we buy all of our media programmatically, both mobile and web. One of the things we really focus on is personalizing the ad. So I think one of the issues as a consumer that you see in mobile is you tend to see a lot of ads that have nothing to do with you. They might be location targeted, but I told this story yesterday that I was yesterday morning I looked at a weather app and I was targeted with an ad because I'm in California for enrolling in the California benefits for health insurance, but I live in New York. It's just a complete waste of an impression. And I saw that ad 15 times yesterday. So I think just focusing on location isn't good enough. That is a signal that you get programmatically, but it often makes no sense. So we focus on getting first-party data and then using that to personalize the ads. So if you are in a retail app and you looked at a pair of shoes and you looked at a pair of pants, we know that you're shopping for clothing, and we can show you an ad that has similar products or the same products you were looking at, or a coupon, something that really makes it feel like we're delivering something of value to you versus just telling you that you can sign up for health insurance in California just because you happen to be here.
I agree with the comment that programmatic is just a method of delivery, very significant. About half of our business is programmatic. But when it comes to being successful in programmatic, being successful as an advertiser, utilizing programmatic, it all comes back to, again, sustainability and seeing what you're getting, the value of what you're spending, being able to tie that back to an ROI. If you look at Clash of Clans, Supercell, and King, their content is very good. They can retain people. They know how to go out and buy those users, but they're making money off of those users, and that's why they're making just heaps and heaps of money. So if they can find the method of advertising that works and generates ROI, that's the key, and that's the future for the advertisers right now. The last 4 years, it was a spray and pray methodology where brands would go in and just market. You talk about at least their retargeting, right? I mean, how many of you have seen a mobile banner ad that has absolutely no context to you whatsoever, let alone finding out that you had at least looked at something in California? Moving forward, it's going to be advertisers are spending money where it makes sense, where it provides value and generates them value and gets them ROI. And the companies that can do that or provide the value as an advertising tech company, provide the value to help an advertiser do that, those are the ones that are going to stick around.
Yeah, so programmatic is certainly creating huge waves and massive disruption through the whole media, the $500, $600 billion media business. But it's still very early in the game. It's, as far as I know, it's about 5% or so of the total global ad spend. So there's still a lot to be done. And there's still a lot of kinks to be worked out because there's so much fraudulent inventory. Some estimates are as much as 50% of the ad impressions are fraudulent or not viewable. So you have advertisers spending for nothing, for waste. They just don't know what's being wasted, as always been said. But that said, I mean, it's completely disrupting or changing the way that ad inventory is being bought and delivered, and certainly the big data analytics behind it is going to is already completely changing it. And I think the big wave that will eventually hit is the premium inventory and the video and the much more impressionable, impactful brand engagement advertising. So right now it's been a lot more about scale and impressions, and frankly a lot of not a lot of integrity to the advertising. But as it eventually evolves into brand impressions and higher engagement, that's when it's actually going to have a much more impactful means to take over the industry.
I actually, that is perfect, and it is worth mentioning that is not a new concept in terms of advertising. One of the largest producers of newspapers, when they were first hitting the Industrial Revolution, said, "Half of my advertising budget is wasted. I just don't know which half." And that is true ultimately all the way to today. It's just the concept of changing and the technology that allows an advertiser to figure out where the spend is best suited is just, it's still being figured out.
So I guess another topic is basically what do you guys see as the major trends, especially in mobile video, and are we going to move? Is things like pre and post roll, are those going to be still the de facto way to reach a consumer, or is things going to move to everything's going to be native, curated from the advertising side? In addition to where's the value of data within your company?
Well, I think one of the interesting things about mobile is it is consuming, as has been said, a large percentage of our time, but in a far different fashion than traditional media. Traditional media is normally long session media. Mobile media is very short session media. It's in and out, in and out, in and out. And this makes traditional types of formats and even advertising models difficult to apply in mobile. Now, video is one of the exceptions, and Facebook is another of the exceptions. One of the reasons Facebook is doing so well in mobile is because the session time within Facebook, tends to be somewhat longer. They've executed also brilliantly. But videos is another area where there's a little bit longer session times. And videos, of course, is the most expensive eCPM there is. In our case, we're actually presenting videos within the context of a store location, within the context of an engagement. So it's actually as good as you can get in terms of video because it's completely relevant to the experience. So for us, video is going to be very important going forward.
I'll take on the data aspect of your question. For us, there's nothing more important than a client being able to measure what happens post-click. We have technology to do that. We can integrate with 12 different analytics providers to do that. But I would say more than half of people who we start to work with don't have any analytics inside of their apps or their mobile commerce sites. So I think the analytics and data side of things is so key, and it really is early days. I think if we have this conversation in 2 years, everybody will have their site and app instrumented so that you can measure everything that's happening. But because a lot of people don't, that's why there's the spray and pray happening where they just measure everything on clicks, and it's very easy to game that system. And there's a lot of companies who make a lot of money just driving a ton of clicks without driving value on the other side. So we focus a lot on attribution and the data that drives attribution.
So your original question, native video, post-stitchels, pre-rolls, where's the future? The answer is yes. It's going to be everything, and what sticks is really going to depend on the content that's produced, the advertisers, where they want to spend, what they think is interesting, but ultimately it's going to be how the consumer reacts. And the key that we're taking in order to make that a success is sustainability. What out there is it actually working? What out there is investing? So video for us right now isn't the best bang for my buck. I can get better ROI out of buying other types of ad formats. So having the flexibility and not investing completely on mobile is key for our business. One thing that no one talks about, a lot of people talk about getting the right advertiser in front of the user and buying that right impression, but no one ever talks about the actual creative in a display or the actual advertising that is showing up. There's a price associated with finding that certain space, but what people aren't testing is the effectiveness of that creative in this space. So our company has invested in this technology platform. It's been so successful. We spun it out as a company called RevJet, where it's investing in A/B testing this creative in a semi-automated way, because you buy the space, and presumably that's a fixed cost bidding up against other people. But once you put that advertisement in the space, it's actually going to be more effective than others. A red button versus a blue button, you'd be surprised how much more effective one color call to action is. So our focus, something that we find very interesting, is once we find that space, once you use the data to get that space, what's the most effective creative for driving ROI for that advertiser to put in that space?
Yeah, so a couple of good concepts there. So obviously, native advertising is changing a lot of the separation, or the traditional separation between advertising and content is being built together in a much more integrated way. I don't think it's anything new. I think it's just, but it's getting a lot of momentum lately. Obviously, there's a question of the integrity of the sponsored content, and to the extent that consumers can clearly understand and distinguish what's being promoted to them and what's the actual editorial content. The video. We've been watching it very carefully over the last kind of 5 or 10 years, because the broadcast and video spend is still the largest bucket of the media and content. If we look at digital, it's still only about maybe 20% of the total global ad spend. So video and the broadcast, to the extent that that becomes digitized, is definitely the largest wave and the largest spend globally. And then the other area is just kind of multi-channel, well, probably a combination of omni-channel marketing or multi-screen device marketing, and just sending messages across all channels synchronously through mobile, desktop, online, offline, and marrying all those messages together, and then taking the data on the back end and being able to follow consumers, especially with the enablement of mobile devices. You could track people a lot more, but marrying online and offline data, and then cross mobile devices. And so taking that kind of data, data analytics, and marrying it with messages across devices or omni-channel marketing, I think that's where kind of the holy grail is heading.
That kind of wraps up. Do we have another more questions? Is that it, Tony?
Yeah, that's it, unfortunately.
Okay.
Give it up for your panel.
Thank you.